Hey guys, welcome back to the channel. Hope you were doing well on Sunday morning. Well, today, guys, we have entered a world that is fundamentally different than the one we left on Friday. By now, I'm sure you've seen the news. You may have saw it last night. You may have seen it for the first time this morning. But the supreme leader of Iran, the Ayatollah Khamenei, has been killed. He was killed in a joint strike by the U.S. and military forces late yesterday afternoon. And while the rest of the world is debating the politics around that strike, around the operation in general, and what will happen in that regional area, we're going to, in this video, going to talk about what we expect to see when the opening bell strikes on Monday morning. What do we expect to see in the markets this week? We had almost 20,000 people watch the video that I dropped yesterday because I feel people are looking for direction. They're looking to better understand what will happen in the market. There's a ton of fear and anxiety right now in the market. People are worried, rightfully so, about what will happen with my portfolio. What should I do? What is the best play for me? So today's video, I'm going to give you my honest opinion backed by data of what I think will happen when the market opens up on Monday, what we could see this week. I'm going to talk about some indexes that you could look at and track just to better understand the sentiment in the market, the fear and anxiety that's out there in the market. And we'll also talk about the stocks that you could be looking at. You know, I'm going to talk specifically about Micron and SanDisk because I think they're amazing companies with amazing fundamentals and could present us with opportunities to enter in those positions if you don't have them. But there's many other companies right now, many other stocks that you may have been looking at with amazing fundamentals that you haven't acquired or haven't taken a position on or added it to your portfolio. There could be excellent opportunities for you to keep your eye on those stocks, those companies this week. And if it hits the level that's right for you, it could be an opportunity to move in and add those stocks and companies to your portfolio. So we'll talk about those two that I mentioned. Those are what I want to cover on today's video. If you haven't done it already, hit like, subscribe to the channel. I appreciate everybody subscribing and joining the community that we started. But let's dive in and talk about what we see today. All right, I'm going to jump over and first start off with investing.com just to get a sentiment of the news that's out there. You may look at other sites as well, but I'm going to just draw our attention to this one. You can see the headline is the Middle East tensions rise as Iran promises retaliation for the killing of their supreme leader. This will cause uncertainty in the market. This will cause some more fear and anxieties in the market. This is exactly what the algorithms will drive their uncertainty. I have to remember that the algorithms that are in place for most institutional investors aren't driven by emotion as we are as retail investors, as we are as humans. They'll just combine the data, the facts, and they'll look to take risk out of their portfolios. So that's one piece. Is this is continued sentiment in the market. There's still a ton of level of uncertainty. I want to jump back over here. There's three headlines that I saw underneath that I totally agree with. One from Barclays that says wait for about a 10% drop on the S&P 500 before you move in as an investor to buy the dip. Keep your eye on companies that you like. Barclays recommends that you should wait to see at least 10% on Monday. On the far right, you'll see that they're expecting oil prices to jump by 10%, could push towards $100 a barrel. We know that oil drives the cost of everything. That'll drive concerns in the market overall. It'll drive investors to push towards safe haven plays. And then the last one is encouraging. It's right here in the bottom. It's the OPEC news. So OPEC earlier this morning did announce that they'll have a modest increase in their oil output to help stabilize the market. So that's encouraging news. Hopefully that'll ease some of the tension we see in the market. But let's dive in and talk a little more deeply about what we expect to see on Monday. What we expect to see is I'm calling the fear gap as we open it on that bell on Monday. I saw many comments on this channel. There were so many, it was hard for me to answer. So I apologize if I haven't got back yet. But there was so many comments about, I think the market's going to immediately bounce. I think we're going to reach new highs in the market. And I love that optimism from investors. And I hope you're right. The way I'm reading it right now is I think we will have some volatility on Monday. I continue to feel that we will have, at the start opening bell, we will see a correction. We will see a gap down, could be anywhere from 1 to a 2% gap down. You know, when you see a supreme leader die or be killed, like we've seen in a regional power, and that regional power is going through a transitional period. Institutional algorithms right now, they're not going to wait for good vibes to come. They're not going to be driven by emotions like we are as humans. They sell first and ask questions later. The gap down that I mentioned of about a 1 to a 2% correction we could see, early in the trading hours. The reason for that is we just don't know who will be in charge of Iran. We don't know who's going to be in charge of their arsenal, their weapon arsenal. We don't know who's going to be trying to continue to push their nuclear position, their nuclear play. Who's going to be in charge of the IRGC? Until a clear successor is announced or a clear surrender has been formalized in the market, institutional algorithms will be programmed to sell equities that they deem as high risk and buy safety. They could see a shift to gold, the US dollars, the treasuries. In fact, we looked at the Brent crude oil price right now has shifted from $73 to $80 a barrel, most recently, I think, as of this morning. And the reason why for that is because of, I talked about it in the video yesterday, it's the Strait of Hormuz. 20% of the world's global oil supply moves through that narrow gap. If the IRGC was to retaliate by mining that gap and putting mines in the water, we will definitely see oil spike over $100 a barrel. But that OPEC news that I announced is an encouraging sign. So we hope that stabilizes some of the fears out there, but we have to keep our eyes on what Iran will do from a retaliatory perspective. That will drive a lot of fear and concern in the market. But my solid advice in that regard for all of us as investors is don't confuse this geopolitical shock that we have right now with a structural breakdown in the market. Markets are historically resilient, as you know, to this Middle East news. We talked about three of them on the channel yesterday. We talked about the Desert Storm, Operation Freedom, the Israeli Hamas. The one piece I failed to mention is if you look at how quickly the markets recover in those. Back in 1991, it took 190 days. We've seen shorter and shorter periods of time for recovery. Most recent one, if you look at Operation Rising Lion, which was done in June of last year, it took about 48 hours to recover. We know Operation Freedom was about a day or 2 days to recover. And so I think the market has been responding faster and faster. And the reason is because of the underlying demand that we see in the market. The underlying economy right now, for those that are interested and watch this channel, I know you're interested in this. It's the AI revolution that we see. And that AI revolution doesn't care who the leader that sits in Tehran. All it cares about is who's creating the chips, how are we meeting the demand, how is the build out continuing to move this AI revolution forward. That AI demand doesn't stop because of the transition in Iran. It will not stop because of the transition in Iran. In fact, the world of rising economies right now, the companies that control the new digital oil that we've talked about, which is memory and compute, these companies become even more important, more valuable. And the recent history that I just talked shows that these fear dips we see in the market, and we're going to jump in and take a look at a fear index in a moment, but they are usually recovered within the first 72 hours. So we should look for the fear index to spike on Monday, but then we'll watch it for a bounce. Now let's jump over and talk about the two companies that I mentioned and why I think there could be amazing opportunities. Again, there may be other opportunities for companies that you love and you've been watching. For me, it's Micron and SanDisk. Micron, for two reasons. One, on Saturday, this news was lost a little bit because of the conflict or Operation Epic Fury, but they announced that they've opened India's first semiconductor mega fab, and they've started to ship chips, the first ever made in India chips, to Dell. So Micron, they're completely sold out. They confirmed they're 100% sold out of their high bandwidth memory through 2026. That means even if you wanted to buy them, even if you were the most important customer in the world, you can't buy any chips right now. They're completely sold out of high bandwidth memory. So if they drop tomorrow, if there's a panic and you see a move in Micron continue and they slide into the red because of this geopolitical risk, you are getting a discount on a company that trades at an incredibly low forward PE, but a discount on a company that has a guaranteed line of customers for the next 18 months. Just think about that. And then think about SanDisk, the company that's been on a parabolic tear since their split with Western Digital. It's up over 1,000% since they split with Western Digital. Probably the most successful spinoff in the history of the market. SanDisk also confirmed that their NAND flash capacity is effectively spoken for through 2026. Both these companies right now are in a perfect storm of supplies fixed, but the demand is infinite. What makes me even more bullish on SanDisk is the partnership that they announced with Taiwan Semiconductor. So we have officially entered the high bandwidth flash standard, both SanDisk and SK Hynix. But what people have missed, I think, right when the news broke around the 25th of February, is that the HBF, the stacks that they're putting onto the AI accelerators, like NVIDIA's Blackwell, soon potentially maybe NVIDIA's Rubin, they need Taiwan Semiconductor's advanced packaging. So there is a partnership that's been announced between these two companies. High bandwidth flash is 16 times larger than high bandwidth memory, but costs a fraction of the price. This could potentially solve the memory wall that we see out in the market, the memory wall that's been holding back AI. So if SanDisk is one of the companies providing this high capacity brain for the next generation of AI, the current valuation we see for them right now is cheap, guys. SanDisk is moving into a position where it isn't a storage company anymore. It's an AI infrastructure company. If the market sells off SanDisk, it could be a great gift for all of us investors. So in my opinion, we should look at market tomorrow for Micron and SanDisk. If they start to drop in the morning because of fear, and if we start to see a 3 or a 5% drop, this is suggests it's an excellent buying opportunity for all of us. It's not a reason to panic. And remember that we have Micron's earnings that are coming up in 17 days. Today's the March 1st. Their earnings will be on March 18th. And then remember, SanDisk, with that partnership with Taiwan Semiconductor, is great news to the market. They are also most likely going to be speaking about that this week on Tuesday, March 3rd at the Morgan Stanley conference. Is one of the investor conferences that SanDisk has committed to share some public comments about the company. So keep your eyes on those. Tomorrow, I would say my advice, and I'm going to jump over and show you some indexes to watch. Let's just do that now. I'm going to jump over. There's 3 indexes I have laid out. You can see this one here. It's the VIX. It's the fear index in the market. I think this one is at an 18.96. Keep your eye on this for about 25. If it gets over 25, then the volatility is real. That's a way to read that. So look at that index. But I would say don't use market orders, in my opinion, before 9:30. Let the amateur hour pass. Let the panic ride in the market overall. A couple other things we could see is the crude oil. You can see right here at 67. If this gets above 75, then that's a sign that the market thinks the war part is escalating. If it stays below 75, then the market could think the war is getting resolved and mostly over, and the fear is being flushed out of the market. And then the last one I have, you can keep an eye on, which is DXY, which is the dollar index. If we start to see this spike, it's a good sign that you have it's a good signal, that there's money moving into the dollar out of riskier assets into safe haven plays overall. So those are 3 indexes to keep your eye on: VIX, WTI for crude oil, and DXY for the US dollar. But overall, my advice is don't get shaken out of the market tomorrow. There will be, and you saw in my thumbnail, I had that see no evil, speak no evil, say no evil concept, because people are going to panic tomorrow with the fear and anxiety. Don't let it be you. Build that fear list that you have for, I was mentioning Micron, SanDisk, for me, the companies I want to track and watch. What are those ones for you? Drop them in the comments. Let me know. What are the ones you're going to be watching if they get to a level that is, you will love the fundamentals, and they drop because of this fear index that we have in the market right now? Could be a great opportunity to jump in on them. Let me know what those are for you. If you're a long-term investor like I am in AI, if you're a long-term investor in these memory plays, tomorrow, to me, in my opinion, is about ignoring the news. The positive sentiment that we're all feeling right now, or what we feel about these stocks, will take probably a couple weeks to show up into the market, to show up into the stocks. So keep your eyes and ears listening for the news related to the Strait of Hormuz. If we hear positive news, if ships are continuing to move through there, that is a great sign great sign for us to hear. Potentially, we could see recovery for this market by middle of the week. Markets have been recovering faster, so I do expect. I don't think this will be ongoing for weeks and weeks. I think we will see recovery. So that's my thoughts overall. Hope you enjoyed the video. Let me know if you enjoyed it in the comments. Leave me a comment. Let me know your thoughts. Hit like and subscribe if you haven't already. Hope you guys have a great Sunday. Look forward to seeing you soon.